Hey y'all, just a quick little review of what I'm seeing with SPY. After today's close, it's been pretty interesting. So last week on Thursday, we pretty much had the JPOW move nailed. I don't know if you guys caught this on our little after hours thing that we were talking about on Thursday. We had this beautiful diamond pattern, and we found that on a 5-minute chart. Let me zoom back out here. Right here, just linked it from open to high, open to low. And we ran, when I say open, this is pre-market open, but this is futures. SPY is a 24-hour market, basically. So ran a trend line extended down from the top and down from the bottom. And sure enough, we get pivot one for that move on the open from when JPOW took the stage and told it like it is. Expected. Really nice move. All right. Market loves doing things twice. Measured move, accumulation, measured move, right to our lower line. This white line here, pay attention to as well. That is an old bearish wolf wave from way back. I always run my trend lines and extend them. So anyway, Monday, we kind of respected those lines. We stayed consolidated just under that wolf wave, broke out, ran to the top, upper line from that old diamond, and we opened and consolidated in the lower line. All right. Today, look at this, right through that gap at the base. Could not have picked a better line to extend really in a long time. But I've actually seen this happen more often than you think. So you run your extension lines and eventually you'll find that price action will kind of fall into a channel and respect it. And essentially today we almost got up to that as resistance, but look at the breakover point. That measured move broke over right here, ran straight down to our old wolf wave target, extended a little bit below it, tested it again. All right, so we're still trending pretty bearish here. Let's go to a 15, maybe a 30-minute. That gives us a pretty good idea right there. So we're kind of falling in this channel. I went ahead and drew a channel line from the top of this. And typically when we get these descending channels, we get a couple things that'll happen. One, they'll tend to respect the center point. Two, they can go and break a resistance level and test the angular resistance on it one more time and then eventually break out and crawl out into a bullish trend and revert all of this price action as basically trading pivots in the bullish move. All right. The other thing that can happen, can test support one more time. There's a good chance we could open right in this range tomorrow at about 396. That's a very good possibility. We could exactly gap down and run and open at 396. I can have pretty good confidence in that's a good number to look at. Or we could just grind on sideways right to that angular resistance and open at 398. That's very possible and probable too. Let's look at a 2-hour now. Now we're starting to see some stuff. So now we got some pivot points. We broke this pivot today, and that is the $400 pivot. Had that marked out for a while. We got an extension level down here that we haven't met yet, and that is the 392.50 area. Marked this out for quite a while now. A little bit on finished business, but if you look, if that were to be a nice true target, you get a bar, accumulation. The next bar as a measured move, repeating this bar, would take it right to that 392.50 area. So we have a good chance of remaining bearish tomorrow. And from there, we probably catch a little bounce back up to that 400 area and maybe even roll over this and repeat this whole trend. We got it all marked out. We're ready for it. And if at any time we see a reversal, all we got to do is change our trade direction. And if you're running like debit spreads out, 30 to 45 days or so, you're catching a trend, you can either lock it in by going into the opposite direction. Say you're running put debit spreads. You can flip that to a set of call debit spreads, turn it into a condor, and ride it out until you figure out whether or not it's going to reverse on you or not. And then you can just sacrifice the winner, or sacrifice the loser, which would really be a gain because you'd have quite a bit of cushion if you were already in put debit spreads, and then run the other direction. many ways to skin this cat, but we know that SPY loves kind of following trend lines and staying within pivots. Its price action is usually pretty easy to predict. So it's a great trading ETF, and it tracks right along with the index. So anyway, I decided to kind of break that out for you guys, give you a little bit of taste of what we do at Bullish Bears. And again, we like to thank you for tuning in. You know, if you like what you see, go ahead and subscribe. We've got a lot more coming, and we're going to get more and more frequent material coming out on our YouTube channel as time goes by. We break this out of our live streams. We'll get little snippets, and you know, I'll often post little trades that I had just to kind of give examples of what we do, and also I'll explain it and walk through it and break it down for you, so you learn something. So if you like learning things, subscribe. We'll keep it coming. You get an alert, and you learn something new, and maybe you didn't know before, and you become a better trader for it. If not, we also have some witty banter. We try to keep it entertaining. So at the very least, we got you covered on both ends. Well, I'm going to sign off for now, and just thought I'd get that out there for you guys and show you what we're about. We'll speak soon. Have good.